Good morning, everybody. Welcome to the Moving Markets Podcast. It is Friday, July the 20th, or July the 31st, 2026. Market is opening right now as we speak. Last day of the month. We're well past the halfway mark of the month now, or of the year, excuse me. Really interesting. The Dow is up today, looking to build on yesterday's massive movement to the upside. Let's get a look at where things are in relation to that. We've got the Dow Jones Industrial Average up to, well, that's pre-market. Let me refresh this screen really quick. Dow Jones up 238, S&P up 39, and the Nasdaq up 227, ranging from a half to a full percent on each one of these. So looking good to start with. Yeah, interesting. Interesting where we're at with some stuff. We've got some things that are really doing nicely. You've got Boeing, or excuse me, Google up $7.50 this morning. Robinhood is down. That's good for our trade. Boeing is down a little bit, but not even nothing that would even concern. If you're not out of your Boeing trade already, I don't think you have any little tiny reason for concern on the Boeing trade. Down $1.23, just not that big a deal. Like I said, Google having a fantastic move to the upside right now. Robinhood, if you didn't get out of Robinhood yesterday, up a little bit, but still several dollars below that short put strike price. I don't see Robinhood during the day today having some massive surge up that would put it over $90 a share. So I really believe you're going to end up being in really good shape on Robinhood. I think when the dust settles on that one, you're going to find that you're in a really good spot on that. And now Boeing just for a second turned positive. So the Boeing trade, again, if you didn't get out of that already, I think you're going to be out of that one really quickly this morning. And then if you were like me and you rolled Google out and have a longer term position on Google, you're loving that move up on that. And Nvidia having another day of some solid movement to the upside. So all in all, some good things going on. With the only exception for our portfolio, the only exception might be if you did not get out of Applied Digital yesterday. I know a lot of people did. I saw some comments on Discord. I saw that a lot of people were successful in getting out of Applied Digital. But if you did not get out of Applied Digital, then you're very concerned today because Applied Digital is now trading right in between the strike prices of where we, right in the middle of where we don't want it to be. So Applied Digital, we've got on the put side, we had the 29, 27 puts going down this way. And on the plus side, we had the 31, 33 calls. So, and right now you can see we're right there in the middle in between, which is the worst possible place it could be. You've got one of two choices with Applied Digital as far as potentially making this a better scenario for you. One, you roll your short put and your short call, you roll them respectively straight down and straight up, go right to the 30 strike price with both of them. You create a $1 credit spread on both sides of the trade. You end up in a traditional iron condor. You only have $1 risk on either side of the trade, but you're going to take in a little over $1 credit for it. And that's going to be better than the loss you would take if you just let it go, if you just left it alone and let it go. And you only lose that dollar. That dollar risk you have is only if it finishes above 31 or below 29 today. So that's the move you make if you did not get out of Applied Digital earlier. And I'll put that on the website. Now, Robinhood, dang, I show this thing up over $2 a share now. So now it's only $1.25 away, $1.25 away from where it would need to be for us to be in a little bit of a trouble. But again, I'm surprised it's up $2 a share right now. I'll be keeping a close eye on that one. If you're not out of Robinhood already, really the only thing you can do is just watch it closely. If it gets too close to $90 a share, you just bail out, even if it's with a small loss. I show my open trade on Robinhood right now, bouncing around between a 5% loss, a break even. Just briefly went down 12%. Now it's back to break even. Now 10%. It's bouncing around a lot. But the longer the day moves on, the trading day, without it getting over $90 a share, the more profitable you're going to get in your trade. So you just got to keep an eye on that one. It's up exactly $2 a share right now. Now 184, now 176. I really believe we're going to be okay on this trade. You just gotta keep a close eye on it. That's all you can do is just watch it closely. Let's see. On the collar trade side of things, I sent out a collar trade adjustment last night for Nvidia. That's looking really good right now because the expiring option today that was at a 205 strike price, it's looking better today and rolling it out a couple of weeks to the 14th with Nvidia moving up for its second day in a row. And I really do think Nvidia, when it got down here to 190, I think it touched bottom. I don't know if it'll go back over to a technical crossover and run back up to 210 or 212 before its next earnings report. But my gut feeling is that it will. I don't know that for a fact, but I really think it will do that. And so I like where we're at with Nvidia right now on our open spread trade and our collar trade. And I think ultimately you end up in really good shape on Nvidia in the very near future. I mentioned this already, but I'm going to go back to it for a minute. If you were in the Google trade with us, the spread trade, the triple play trade, and you found yourself having to roll that out, and some of us have rolled out to the 21st of August. You're up nicely in that trade right now today, and improving. It's looking better and better, and you've got a good chance of ultimately being in really good shape on that trade. So all in all, I like the way we're positioned. I don't like some of these recent losses that we've taken, Micron being the one that I least like, but we're back on track with some good trades looking like they're going to get profitable in the way of Robinhood, Boeing, Google, Nvidia, and then looks like we're going to take a little bit of a loss on Applied Digital, only if you didn't get out yesterday. And I envy those who did get out because I did not, and I wish I would have. And I tried, but I maybe was a little bit greedy with my limit order, and shame on me for doing that. So that's where we find ourselves on a Friday morning. Now, I got to tell you, with this market, with everything, all the indexes being up this morning, that's nice. I like that everything is up, but you got to be careful on a day like today that you don't get out over your skis with this market, with all these indexes being up. It is the last day of the month. It is the option expiration Friday. And there are people that have a tendency to sort of rebalance, take some profit off the table, sort of shuffle things around as they go into the new month. And so don't you cannot, I'm not predicting that it will happen, but you cannot be surprised if you get a reversal on all of these indexes before the end of the day. The indexes are flying in direct opposition to where oil is going, in direct opposition to where bond prices are going, and you've got to weigh that in. You've got to take that into account and say, yeah, with bond prices being up this morning, with oil prices being up this morning, it could reverse a good start to the markets right now. So don't do anything crazy. Don't reposition anything to an overly bullish stance and then just cross your fingers that it works out okay. You've got to be a little more prudent than that and be a little more cautious than that. So this is where we find ourselves on a Friday morning. Overall, I think in a good position with the indexes all moving to the upside, but be smart, be careful, and have a good weekend. I mean, we're in a good spot mostly, and I think we'll end up in a really good spot when the week is officially over. Jeff asked the question. Jeff is on with us this morning, and he asked the question: are we in for a hard rest of summer? Traditionally, July and August are two of the worst They're two of the worst months of the entire trading year. You look at July, and let me go up here to this 6 month chart. You look at July, which started, let's see, right about here. I think this was the first trading day of July, right in there somewhere. And, July started to the upside, had a big drop, and now it's coming back. I think we finished the month of July about break even or just a tiny bit to the upside in the S&P 500. But August, right now, I think August is a crapshoot. And here's why I think that. Here's why I'm not like super, super confident right now that we end up with a July, or excuse me, with an August that is a really bad month. The reason I might think that is because I we've all been wanting an end to this war in Iran within the first couple of weeks that it was going. We've wanted it to end, and we were told it would be weeks, not months. And now we are 5 months into this thing. The markets have kind of placated right now, and sort of, oil is up today, and it's up since the start, but not a lot. And we could very, very easily see a strong, strong August if in the first week, and that's just basically just next week, if we really see something to suggest that this war is ending, then you could absolutely see a very robust rally through the rest of August, and we could end up in really good shape. So don't give up automatically and assume that August is going to be bad. August could still end up being pretty good. So, don't throw in the towel too quickly. Historically, it's a bad month, but there are some things going on that could flip that script and flip it really quickly. So I would say just keep an eye on that, and I think it'll be a choppy month. I'll give you a little prediction on August. I think it will be very choppy. I think you'll see some big swings up and down. I think we finished August a little bit to the upside, because even if it took a couple of weeks into August to see things really truly wrapping up over in the Middle East, um, it still, I think, will happen in August, and that would bode very well for a strong finish at the end of the month. Paul, you did mention that Boeing is dropping fast. Yeah, but it has so much farther it would have to go for us to be in trouble on it. I'm not overly worried about it. Yeah, I don't love the fact that Boeing is moving down right now. I wish it were not moving down, but we're still so deep in the money on that. Short call on Boeing that I'm not stressing it. I'm not sweating it. Boeing moved down a little bit at the open yesterday. Today it started to the upside and then has been moving down, but it would really have to crater, and I mean absolutely crater, for us to be in trouble. I don't see that happening. I'm not saying it couldn't happen. I just don't see it happening. So I'm okay with where we're at with Boeing. And look, my trade on Boeing right now is up 16%. I'm going for 20%. I think it'll hit that. I really think it'll hit that, and I think it'll hit it pretty easily. Because you're still $7 in the money. So even though it's given up $3.50, a little over $3.50 already, and it was down $4 a share briefly, I don't see it in the midst of the rest of the market indexes being up. I don't see it turning and becoming a big drag. So I think we'll be okay on that. All right. I'm going to wrap up right there, everybody. Have a great weekend. If you have other questions on any of it, instant message me. But in the meantime, have a great weekend. We'll be back live on Monday morning. Thanks. Bye-bye.